Imagine having the responsibility of managing investors' funds of over $100 million and having to invest them. Can you feel the pressure? I certainly would. What if I told you there's a law in America that says if you manage over $100 million, you must disclose to the world every 3 months what stocks you bought, sold, and essentially what you did with the investors' money in the last month? In this video, we will look at all these billionaires and take a peek behind the curtain of these super investors and the world's best asset managers. What did they buy? What did they sell? Because some of them made significant changes to their assets and portfolios. Trust me, this video is packed with all the top names from the world of billionaires, investors, asset managers. At the end of the video, I'll have a personal insertion and tell you why I think the longer I invest, it's been almost 10 years for me, the better I do in investments and markets. We are InvestGuide, and welcome to another investment video. For this video, we'll draw from the Dataroma website, which I highly recommend for tracking what's happening in the portfolios of these super investors. Our first super investor and asset manager, you probably don't know. It's Chris Hohn, who manages $28 billion.
We run concentrated. Positions can be in excess of 10% of NAV, and so by concentrating our capital in a handful of very good ideas, where we find the alpha, it can mean something and can outperform.
Chris is extremely conservative in his investments and has a lot of faith. With these $28 billion under management, he holds only 9 positions. So, he likely trusts them a lot. He concentrates investors' money in companies that are very high quality, what we call blue chip stocks. That's why he can afford to have only 9 of them in his portfolio. He understands them in detail, and that's how he's been outperforming the S&P 500 index for decades. Notice that his average holding period for a stock is 15 years. That's what I call long-term investing. Also, notice that the size of these individual positions is similar. There isn't a single position that makes up maybe 50% of the portfolio, like Buffett and Apple, which we'll talk about later. Chris has a very balanced portfolio, where each position has roughly the same percentage weight. Let's see what he bought and sold. What surprised me was that in the last quarter, in the last 3 months, Chris sold his entire position in Microsoft and made a significant profit. What could have changed? Because Microsoft is also in my portfolio and is one of my largest positions, where I have most of my money. Looking at it, Microsoft has grown by more than 54% since the beginning of the year. Of course, we can only speculate, but my opinion is that Chris simply wanted to quote-unquote realize a profit. He made good money on it and didn't want to risk any potential decline in Microsoft, which might come in the following months because, despite the declines in this and the previous year, Microsoft is at its absolute peak. He also sold a bit of Visa, maybe a service you use for payments, and divested a little bit of Google, but those were very small positions, less than 1%. So, I'd say insignificant. Looking at his portfolio today, the largest position in his portfolio is General Electric, which accounts for more than 16%. It's a very old company, over 100 years in the market, a blue-chip, quality, profitable company that operates in finance, media, energy, and more. Definitely a company with a huge competitive advantage and even pays a tiny dividend. The second largest position in the portfolio is in Canadian railway stocks. Railways are a good stable business because consider, what are the chances that someone will build another national Canadian railway? Such a railway will earn you money year after year. Furthermore, he has Visa, MasterCard, huge payment facilitators. Again, enormous competitive advantage for these companies. You see the pattern? You see that Chris selects these big high-quality companies for his portfolio where there's a huge competitive advantage, and it's very hard to replace them in the market. Imagine starting a new payment facilitator. How would you compete with Visa or MasterCard? Very difficult. The pattern is clear. Stable, old companies, essentially monopolies in their industry. This allows him to comfortably hold onto these companies for 15 years, as Chris does in his portfolio, because he knows it's a business that will still be here in 20 years, probably making more and more money, unless something terrible happens. That way, you'll consistently deliver very decent results year after year. Hence, he needs only 9 positions for $28 billion. Another super investor is Michael Burry. Yeah, that's the guy who bet against the American housing market crash and made about $100 million from it.
The economy on the verge of collapse, I did the logical thing. I sought to profit from it.
Anyone somewhat versed in the investment world knows that Burry is somewhat unique. He's a short seller, meaning while most investors bet on growth, they bet on the economy expanding, that we'll all be better off. Burry bets on the exact opposite. He profits when stock prices drop. In recent months, Burry shook the American and overall stock markets with the news that he shorted the American economy and the S&P 500 index. But as we know today, that didn't work out so well for him, and the markets have been rising since then. We don't know the exact numbers, but Burry lost a significant amount of money on this bet that didn't go well for him. Looking at his recent buys and sells, we won't get much from it. There are numerous purchases and sales, where he bought and sold entire positions. For the average person, it's absolute chaos. Burry often buys very small companies that are undervalued, but their names won't ring a bell to most investors. However, he is currently likely heavily invested in the Chinese market and bought a lot of the so-called Chinese Amazon, Alibaba. This stock is down about 5% since the beginning of the year. And although personally, I don't have much faith in the Chinese market, a lot of people have been buying it lately. So, perhaps it's relatively cheap if Burry is buying it too. Besides Alibaba, he also has a lot of faith in Booking stocks, a company you might know if you travel and don't necessarily stay in hotels directly. He's a trader, a completely different style than mine and likely most of yours. Personally, I'm not trying to find the next Amazon that will increase by 500%, 100% over the next 2 years. I focus solely on profitable companies with positive cash flow and buy them at good prices. When you look at my portfolios, I have dividend stocks like Altria, Google, or the CVS Pharmacy Network. In the second portfolio, I have Microsoft or Meta from Zuckerberg. They're all large high-quality companies with a great future and increasing cash flow. I bet on them mainly last year when I bought a lot, and today, these quality great companies are returning results. And my portfolio has been up by more than 37% without dividends since the beginning of the year, meaning with dividends, it's well over 40% this year.
Stocks sell at silly prices from time to time. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act.
Looking at Buffett's recent buys and sells, there wasn't much excitement. There were no extremely significant moves, some small purchases, but the media picked up on this report that says Buffett holds a record amount of cash in his portfolio, more than $150 billion. Buffett has been preparing for a big purchase for several months, and increasingly so. Of course, Buffett doesn't hold this money in a regular or savings account, but he has it in US government bonds that mature within a year. He can quickly access it. These bonds yield Buffett about 5% annually, which is quite a decent return on cash. But as Buffett says, he doesn't like to hold cash, he prefers stocks, so we can predict from this that Buffett would rather be buying something, but he's probably waiting for a downturn. At least that's what a lot of analysts and people speculate. They speculate that since Buffett holds so much money, he's waiting for a crisis, crash, decline, to buy entire companies at a discount. That's precisely what he did in 2008, and it paid off extremely well. All you need is one significant good purchase at a discount, and you benefit from it for the next 15 years, just like Buffett did. I've also looked into portfolios of Bill Gates, Bill Ackman, Terry Smith, and all these super investors who manage tens of billions, and they all have a similar investing style. They have highly concentrated portfolios in quality companies, old companies, profitable companies, and companies with significant competitive advantages. And I've been reflecting on myself too. Self-reflection for an investor is extremely important. I've pondered why I've been doing much better in the last 4 years than when I started in the first 4 years. It struck me, and I think it's inspirational for you too. In my opinion, the most important thing is emotional control. Knowing how to organize it in your head. What I want, for how long, how much I want to dedicate to it, and what to expect from it. According to me, discipline is the most important thing. The ability to stick to a plan. My investment plan is simple. Half of the portfolio in passive indexes, S&P 500 index, and others, and the other half in individual stocks, where I try to pick highly quality businesses at reasonable prices. I choose companies and their stocks that have a dominant position in the market, enormous competitive advantage, strong brand, and a scalable business. When I think of that, I think of Meta, I think of Google, Apple, Microsoft, Visa, Starbucks. Occasionally, I speculate on stocks like Palantir, and sometimes it works out like Palantir, and sometimes it just doesn't. But I know that if I remain disciplined and stick to this investment thesis of mine, I'll have very good results, and I recommend the same to you. Write down such an investment thesis for yourself, stick to it, and I guarantee it will greatly help you in your investment career. Take care.